The collapse of FTX and other crypto companies has dealt a catastrophic blow to crypto's reputation and aspirations. Is this merely a big crash, or is this crypto's last stand? The value of Bitcoin peaked at $69,000 in November 2021, before falling to $17,000 by mid-June 2022. Since then, the value has fluctuated around $17,000. Cryptocurrencies is part of overlapping investment manias, including meme stocks, trading cards, NFTs, and sneakers, that got people chasing speculative investments over the past few years. If a bank fails, the government might step in and bail it out. A hallmark of crypto is that it is largely unregulated. Hacks can't be reversed, misplaced funds can't be retrieved by calling customer service, and a failing crypto exchange is not likely to get a government bailout. Investors have few protections.
I do think the FTX downfall is a bit of a black mark for the industry, and it's not representative of the whole industry, of course, though. And in traditional financial services, occasionally you see bad actors as well, like Bernie Madoff or what happened at Enron. Now, in terms of regulation, I do think that it won't be a bad thing. We've actually, Coinbase has been calling for clear regulation and trying to work with policymakers for quite a while. We've made some progress on that across various G20 countries. But I think it will serve as a wake-up call and sort of a moment of catalyst where we'll get more clear regulation in the United States. And I think that'll actually be a good thing for both Coinbase and the whole industry.
Risky bets at several crypto projects once deemed valuable have already led to death spirals, incinerating billions of dollars worth of investors' money. But FTX and Sam Bankman-Fried stand out. He appeared on magazine covers, schmoozed regulators, grew his profile in philanthropy and politics, and even sponsored a sports arena in Miami. He made hundreds of investments in smaller crypto projects and aggressively bailed out failing ones. Bankman-Fried is already drawing comparisons to Bernie Madoff. And just as Madoff's Ponzi scheme fell apart during the 2008 financial crisis, FTX's collapse arrives amid a broader pullback for the tech industry. Nearly 800 tech companies have laid off more than 120,000 workers this year.
With such a big player going down, I think we're seeing $30–40 billion of value that's the FTX valuation that was before that they raised that, plus quite a few $billion of user funds that's kind of gone. So with this type of events happening, it's devastating for the industry. A lot of consumer confidence is shaken, and I think basically we've been set back a few years. Now regulators rightfully will scrutinize this industry much harder, which is probably a good thing, to be honest.
Though authorities around the world have expressed the need to bring crypto within the regulatory perimeter, fundamental challenges exist. Can something freewheeling, borderless, ever-evolving and unbeholden to any government or agency for its existence actually be regulated? Cryptocurrency is basically a collection of binary data. However, we have been conditioned to believe that money must be tangible, backed by something tangible or by the guarantee of a government or a central bank. To accept an intangible computer code as money is a paradigm shift in our belief systems.
I'm a major skeptic on crypto tokens, which you call currency, like Bitcoin. They are decentralized Ponzi schemes.
If it's called a stable coin and its point is to be stable, someone could look at UST and say, this product did nothing. Does that make you an Elizabeth Holmes?
I don't think so.
Given that cryptocurrency isn't issued by a government or central bank but is mined by individuals around the world, it isn't clear who exactly would have the authority to regulate it. Unlike securities markets that have a range of entities between buyer and seller, there are no intermediaries in the cryptocurrency market. The cryptocurrency exchanges function as trading platforms for order routing and trade matching. This potentially exposes investors to scams and frauds.
The U.S. is sort of unique among the developed countries in our fragmented approach to regulation. So when I hear people talk about the idea that we need one regulator for crypto, I would say we should first have one regulator for banks, but we have 3 of them. Or if you're an investment bank, 5 of them. So that's inherent in the system that we've got. What I say to that is, the last thing we need to do is add another regulator to a system that's already got dozens of regulators. What we need to do instead is have parity for crypto activity along with traditional finance. If I'm a crypto lending platform, I should probably be regulated by the FDIC. If I'm a crypto trading platform, I should probably be regulated by the CFTC and SEC. But somehow we treat crypto, because it's new, as different from everything else. And I'm going to argue that crypto is just a step function improvement in the system. We already have a regulatory system. The laws are super clear how it works, but there's something about crypto that scares people.
The number one way that the government could regulate cryptocurrencies is by taxing any fiat money you use to cash out a virtual token. The main problem with this is that this would have to apply to specific tokens, and a cryptocurrency owner could simply turn to another coin to cash out. Even if the government and the FCA made regulations today, it will take months before regulation kicks in. One after another, big crypto companies fall. Big frauds get caught, and investors lose trust in the crypto industry. No matter your opinion over the cryptocurrency craze, it has the potential to completely disrupt monetary policy across the globe. With hundreds of new tokens offered each month, it seems as though the effort to regulate cryptocurrencies will forever remain a game of cat and mouse.